Welcome to The Explainer. You know, sometimes the best way to see the future is to look at what the biggest companies are doing right now. Today, we've got our hands on a Q2 shareholder letter from a major crypto player. And let me tell you, these things are absolute gold mines. We're going to tear this thing apart and see what it really tells us about the future of finance. Let's dive in. And right away, bam, they just put it right out there. This one sentence is the key. It's the mission statement that frames everything else in the report. They're not just building a crypto exchange, they're trying to build a whole new financial system. You got to keep that massive goal in mind as we go through the rest of this. So, before we even touch the numbers or the spreadsheets, we have to get our heads around this grand vision. What in the world does on-chain finance actually mean? Understanding this is crucial because it's the glue that holds all their different strategies together. Okay, so here's the big idea. On-chain finance is all about moving money and financial services off of the private, closed systems that banks use and onto public, open blockchains. The promise here is huge, a system that's way faster, way more open, and accessible to anyone on the planet with an internet connection. We're talking transactions that take milliseconds and cost, well, millicents. And this right here, this is their playbook. This is how they see it all unfolding. They believe crypto adoption happens in 3 distinct phases. Phase 1, that's where we've mostly been, crypto as an investment you can buy and sell. Phase 2 is crypto as a financial service, think payments and loans. And the final frontier, Phase 3, is crypto as a platform for everything else. Apps, games, you name it. This 3-step plan is their North Star. All right, vision is great, but now it's time for a reality check. Let's pull up the Q2 report card and see how they're actually doing. Do the numbers back up the big talk? This is where the story gets really interesting. And boom! Look at that headline number, $1.4 billion in net income for just 1 quarter. I mean, on the surface, that looks absolutely incredible, right? A total blockbuster result. But you and I both know, you never, ever stop at the headline number. Is that $1.4 billion really a true picture of how their core business is performing day in and day out? Let's take a little deeper. And here it is. This is the real story. Their official, by-the-book net income is $1.4 billion. But look over at their adjusted net income. It drops all the way down to just $33 million. That is a massive, massive difference. So what on earth is going on between these two numbers? Well, the letter actually explains it pretty clearly. That giant $1.4 billion number includes almost $1.9 billion in what are called unrealized gains, basically profits that are just on paper from their investments, including a huge one in the company behind the USDC stablecoin. So if you strip those temporary gains out, you get to that $33 million figure. And that number gives us a much cleaner look at the profit from their actual day-to-day business. So speaking of their actual business, where's the money coming from? This chart lays it out perfectly. You can see it's almost a dead-even split. About half comes from transaction revenue, the fees they make when people trade crypto, and the other half comes from subscriptions and services. That second slice of the pie is becoming super important for them. And here's why that matters. The trading fees, they go up and down with the wild swings of the market. But that subscription and services revenue, that's coming from things like stablecoins, which are tokens pegged to a currency like the dollar, and staking, which is where people earn rewards for helping to secure a crypto network. That income is way more stable and predictable. It's kind of like their anchor in a very stormy sea. Okay, so we've got the vision, we've got the numbers. Now let's see what they actually did in Q2. What were they building to push this whole on-chain idea forward? This is where the rubber really meets the road. And yeah, they were busy. You can actually map all these achievements right back to that 3-phase plan we talked about. Launching regulated futures, that's all about strengthening phase 1, investing. The Shopify partnership for USDC payments, a huge step into phase 2, financial services. And scaling their base chain while launching a new app with a crazy long waitlist, that is a massive, massive push into phase 3, the app platform. They are absolutely firing on all cylinders. Now, as big as all that was, you could argue the biggest story of the quarter didn't even happen inside the company. It happened in Washington, D.C. The whole regulatory picture is finally starting to clear up, and it's shaping the path forward for everyone in this space. In the letter, they call July a month of monumental milestones, and honestly, they're not exaggerating. The Genius Act, which sets clear rules for stablecoins, was actually signed into law. And the Clarity Act, which is a much broader framework for all digital assets, passed the House. After years of total uncertainty, this is a really big deal. So why is this so important? Well, for the longest time, the biggest question mark hanging over the entire crypto industry in the US has been regulation. What are the rules? This new clarity finally starts to answer that. It lowers the risk for builders, for investors, for big institutions, and it could finally throw the doors wide open for mainstream adoption. All right, last thing. Let's take a peek into the company's own crystal ball. Looking ahead to Q3, they're feeling pretty good about their subscription and services revenue. They expect that to keep growing. But notice they're a lot more cautious about transaction revenue. They know they can't predict the market. They also tell us they're going to be spending more and hiring more people, getting ready to jump on all these new opportunities. And that really brings us to the final big question. We started this whole thing with that huge vision of an on-chain financial system. Now, after looking at the real numbers, the strategic moves they're making, and these huge policy wins, you just have to wonder, is this whole idea finally starting to move from a far-off vision into an actual, tangible reality? That's the billion-dollar question this letter leaves us with. Thanks for watching The Explainer.